Banks stand at the center of our financial universe, yet their inner workings remain a mystery to most. As President Andrew Jackson once warned, if the public truly grasped the injustice of our banking system, there would be a revolution by morning. Behind the polished counters and polite smiles lies a reality far more complex and far-reaching, one that shapes not just economies, but the very decisions people make each day. From the creation of money to the subtle mechanisms of debt, banks influence lives in ways many never fully comprehend. Hidden behind layers of financial jargon and institutional tradition are 9 powerful truths that reveal how the system really works. Until these truths are uncovered, the average person is like a puppet, manipulated by an invisible hand. But once these secrets are known, everything changes. Most people believe that their savings account is working for them. The truth, however, is that it works far more for the bank. Depositing money might offer a sense of security, but the interest earned is almost negligible, often below 1%. Meanwhile, banks take those same funds and lend them at rates many times higher, from modest loans to exorbitant credit card interest. The result is a system where banks earn massive profits using other people's money, while depositors receive only crumbs. That money, while seemingly safe, is quietly losing value to inflation. Keeping too much in a low-yield account risks long-term erosion of wealth, whereas assets like index funds, stocks, or real estate have the potential to grow and protect against inflation's silent toll. And it doesn't end there. Through a system called fractional reserve banking, banks are legally allowed to lend out most of the money deposited with them, effectively creating new money out of thin air. If someone deposits $1,000, the bank might lend out 90% of it to another customer. Yet the depositor's statement still reflects the full amount, and the borrower also receives usable funds. In essence, 2 people now have claim to the same money. This process repeats across the financial system, multiplying the money supply far beyond what physically exists. It's a delicate balance that relies entirely on public confidence, confidence that can falter in moments of crisis. Debt in this system isn't just a product, it's the engine. Banks thrive on it. Whether it's a mortgage, an auto loan, or a credit card balance, interest payments represent a steady stream of profit. The longer someone stays in debt, the more the bank earns. Credit cards in particular exploit this, with interest rates that often soar above 20%. Many people fall into the trap of making only minimum payments, watching their balances barely move while interest compounds quietly in the background. For banks, this isn't a flaw, it's the goal. But here's the twist. The wealthier someone is, the better the deal they get. While an average person might pay a steep interest rate, someone with millions can borrow money for next to nothing. It's not about fairness, it's about risk. Banks view wealthy borrowers as low-risk clients and reward them accordingly. This creates a 2-tiered system where the rich can borrow cheaply, invest that borrowed money, and generate even more wealth. The same rules don't apply equally to everyone. And though banks often present themselves as financial partners, their true role is that of a business. When recommending products, be it savings plans, credit cards, or investment accounts, they do so with profit in mind. Advisors may appear helpful, but their incentives often lie with the institution, not the customer. Friendly guidance may come with hidden fees, poor returns, or products designed to benefit the bank first. That's why it's essential to compare options and ask questions before trusting any financial advice from a bank. Yet within this system, there is a way to flip the script. Banks like J.P. Morgan Chase or Goldman Sachs are publicly traded companies, meaning anyone can buy shares and participate in their profits. Instead of simply handing over money as a customer, one can become a shareholder, collecting dividends and capital gains. It won't make someone rich overnight, but it's a powerful shift in perspective, from being used by the system to profiting from it. Still, one of the most dangerous threats to wealth is inflation. It creeps in silently, eroding the purchasing power of every dollar over time. If a savings account offers a 0.5% return while inflation runs at 3%, the real value of that money is shrinking. For banks, though, inflation can be advantageous, reducing the real cost of the money they lend out at fixed rates. To counteract this, it's vital to invest in assets that have the potential to outpace inflation and preserve long-term value. Most surprisingly, nearly all the money in circulation is actually debt. Central banks create currency in exchange for government debt, and private banks issue loans that expand the money supply even further. Almost every dollar begins its life as borrowed money, which means there's always more debt than actual currency. This structure keeps economies moving, but it also fuels a relentless cycle of borrowing and repayment. In the end, the greatest weapon anyone has is knowledge. Banks depend on the public's lack of understanding, on people not knowing how money is created, how interest compounds, or how inflation operates. This lack of awareness makes it easy for individuals to fall into financial traps, overpay in interest, or leave their savings vulnerable. But knowledge shifts the power. It enables people to ask better questions, make smarter decisions, and build a financial life rooted in intention rather than reaction. Together, these 9 secrets form a revealing portrait of the banking system, not to vilify it, but to understand it. Banks will always seek profit, but armed with clarity, individuals can protect their wealth, make strategic use of debt, and even participate in the profits banks enjoy. It's not about rejecting the system, it's about mastering it. And once these truths are seen clearly, financial freedom is no longer a mystery, it becomes a plan. Thanks for watching InvestingFlix, where smart money learns smarter moves. Subscribe for more insights that grow your wealth.